The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. Doesn't matter whether you're in Lutz or somewhere else in Florida or somewhere else in the entire world. We love to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So we've got Tim Ord on at 2:15, so hang on to your hats for that. He got a bunch of nice charts there, fairly interesting to some. So we'll have those for you. We'll have some charts later in the show at the 2:40 segment, so we'll go through that. Right now, kind of light volume to the upside. We had kind of a push lower. Not much happened. Dow's off 46. NASDAQ's up 76, but not much juice. Russell's up 2 points, 1/10 of a point. Crude oil's off about 0.8 of a point. Gold off about 0.6. Silver off about 1.6%. So we've got kind of a market that I don't think really knows what to do. We had our sell-off. We had some decent volume yesterday. The question is, what happens now? Options continue to be very bearish even into tomorrow. That doesn't always work, but 80% of the time it does. Certainly got at least a chunk of that to the downside yesterday. I am short a lot of stuff, added another short position today, but those seem to be, for the most part, in the black. I'm not really going after individual indexes, although I started one today. So we'll see. But several areas looking kind of weak. So we kind of got that. We got about so much. Anyway, after the bell tonight, we'll start looking at a few. We've got Workday. And again, same kind of pattern we saw in a lot of other stocks here. And that is lower highs, higher low. Lower highs and higher lows. So we'll see about this one after the bell tonight. Of course, we had NVIDIA that had good earnings, but it didn't come anywhere close to the whisper numbers. Not doing so bad right now. It's 538, so it's basically flat from the close yesterday. Options kind of pointed to either lower or flat. You did get down to about 525-ish or so earlier. There's not a whole lot here. Right now, all that's happening is a lot of option premiums in both puts and calls are going to that market maker heaven, money heaven. Well, if you were a market maker for NVIDIA, things couldn't be any better for you than today. This is your Christmas, and I'm sure there was a bunch of money on this one. So we've got a few things like that going on. Other big poppers that I think that are interesting is Tesla. Certainly seeing Tesla right now test 118 million share high back on September 1st. That was 502.49. You went above it with 508.61 today, so you're doing a little less than half the volume. Now, the problem is you got a fairly decent sell signal as it came back in, but what you didn't have was people not shorting, and that's what you don't want to see in a stock like this. Shorting had kind of gone down on a daily basis by the FINRA data to about 15%, which is fairly low. You only have about 1% actually short Tesla now. This thing is at $500. So there are not a lot of people sitting around short this thing from 3 months ago. What you do have is people shorting 1 out of 3 shares over the last 2 days, and they instantly get run out. That FINRA data, if you ever need the link to it, just email me at path@tfnn.com, and I will be more than glad to email you back the link. But you want to see that, and especially if you're talking about these high flyers, you don't want to be short when everybody else is short. Now, there aren't a ton of these stocks out here in the big names with heavy shorting in the last few days. It has been rather light. So I'm not particularly bullish on a lot of these, but certainly you don't want to see a stock testing a previous high on lighter volume. Got a little history to do. We'll be back with Tim Ord at 2:15, but let's do a little history.
It's all just a little bit of history repeating.
Of course, on this day, we had the dedication of the military cemetery at Gettysburg, and we've got this, which I think is apropos.
77 years ago, our fathers brought forth on this continent a new nation, conceived in liberty and dedicated to the proposition that all men are created equal. Now we are engaged in a great civil war, testing whether that nation, or any nation so conceived and so dedicated, can long endure. We are met on a great battlefield of that war. We have come to dedicate a portion of that field as a final resting place for those who here gave their lives that that nation might live. It is altogether fitting and proper that we should do this. But in a larger sense, we cannot dedicate, we cannot consecrate, we cannot hallow this ground. The brave men living and dead who struggled here have consecrated it far above our poor power to add or detract. The world will little note nor long remember what we say here, but it can never forget what they did here. It is for us, the living, rather, to be dedicated here to the unfinished work which they who fought here have thus far so nobly advanced. It is rather for us to be here dedicated to the great task remaining before us, that from these honored dead we take increased devotion to that cause for which they gave the last full measure of devotion. That we here highly resolve that these dead shall not have died in vain, that this nation, under God, shall have a new birth of freedom, and that government of the people, by the people, for the people, shall not perish from the earth.
Well, you don't hear people talk like that much anymore, but maybe we should. We'll be back in just a minute or two with Tim Ord, and go through his charts. Got lots. Got 3 charts today. If you want them, just email me at path@tfnn.com. Send you copies of them. Back with Tim Ord of the ord-oracle.com.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we welcome to the microphones Tim Ord of the ord-oracle.com. Of course, he also wrote the book, The Secret Science of Price and Volume Techniques for Spotting Market Trends, Hot Sectors, and the Best Stocks. Got 4 stars. And it always kind of like the Godfather movie. I want to find the reviewer that gave the Godfather a thumbs down. You'd have 5 stars without one little guy out there who had to put the thumb down. So a pretty good book, especially in this day of someone always running around with a thumb down. But anyway, great book, and I've got my copy of it here, and see if we can actually show it here. Actually personal autographed from Tim this many years ago. What was that, 2008?
Yeah,
when was
2008. That when that's a lifetime ago. So at least for a for an 18-year-old, I guess, or a 12-year-old rather. So.
Well, I think everything in the stock market you got to count in dog years. So
yeah,
kind of
you do. So
okay, well, we got some charts here from you. And let me pop them up real here. Lots happened since we last talked. Let's go ahead and start looking at this one. I've got the advanced decline line up here with the McClellan Summation Index, the $500, the S&P 500 large cap, and okay, some other stuff here.
Yeah, well, actually, the only thing this is kind of like a long-term chart. Chart number 1, which is up in the left-hand corner. It says what ADV SPX. That's the one we're on, chart 1.
Yes.
Yeah. Okay. Anyhow, this chart, it just kind of looks like a bigger picture of what's really going on internally in the market. And this chart goes back to kind of mid-2014, and the second window up from the bottom is a 10-day average of the advanced decline, which is basically when it gets above around 3.4, it shows that the 10-day breadth was 2 to 1 to the upside. And normally those, a lot of times they come off of lows. Sometimes they come in the middle of a move. But what it does signify that the market's actually in a strong position. We had one of those readings just happen here back in, looks like about early October. And the market did fall back down, but it came right back up because the market has shown strength. So this is kind of a longer-term chart suggesting that there's quite a bit of strength out there, according to this. It's actually a Marty Zwag indicator. He developed back in, I don't know when it was, probably early 90s or something. And it has stood the test of time in generally. And when you see it coming off of a major low, like we did off that March low, it really signals that the market's in a strong position. And so far, since we just had this reading back in October, even though it's a month and a half old, it's still in a pretty good position. And the bottom window is a percent of stocks above the 50-day average. Normally, if the market can't get above 70% of the stocks above the 50-day average, usually the market's in a weak position. And I pointed that back out in 2015, that kind of a pink area there. The market kind of rallied up, but the percent of stocks above the 50-day average never got above 70%. So that was kind of a warning that the market's peaking out. And it happened back in March of this year, never got above 50%. If you notice now, we're about 81%. The stocks above the 50-day average about 81%. You can have short-term corrections, but it's usually not in a intermediate-term topping pattern. It could lead to one, but in general, what this suggests, if we do get a pullback, it'd be safe to buy the pullback. Another indicator is actually in the top window there, is the SPX McCollum oscillator. And normally when it gets up plus 75, which it did back in October, it's just another sign that the market's in a healthy position. So there's a couple of longer-term indicators here suggesting that, at least for intermediate term, there's probably at least another 3 months maybe, but the market's probably okay, and no major top is forming here. So that's what I wanted to point out on this chart. So, you got any questions on it, or?
You're down here. You've got the 10-day 2-to-1 breadth thrust, and that's the Marty Zwag thing.
Yeah, Marty's. Marty's.
That's how I've always pronounced it, Zwag, something like that.
Yeah, if you Google him, he was really done well in the market over the years, and he had a market letter back in the 90s, maybe in the 80s, and he had a lot of good indicators that worked over time. Swag is his number, Marty Swag.
Okay.
SWIEG, I think, Swag. If you Google him, he had a bunch of indicators, and this was one of them. And so I pay attention to it. I put it on this chart, and in general, it works pretty well. What you really want to see is coming right off of the bottom. That's when it works the best. So you got an impulse wave going up after a panic low. So, and the 50-day average thing, which is a bottom chart, if you're above 70, normally the rally's in a strong position. I'm not saying you can have a 3-4% pullback. Yeah, you can. But in general, the market's going to work higher. So, and that's worked well over time too. So, anyhow, the market's not, the market usually weakens before it tops. And so far, we're not seeing any weakness yet. And will it occur? I don't know. We'll have to wait, in the months to come. But as it sits right now, I'd say this month is going to be up, which is getting close to be over. Next month, I think, according to seasonality, I think the month of December is up 75% of the time, according to seasonality. So, not every December. Remember, 2018, it got clobbered, but mostly December is usually an up month. So
I don't see it in any of your charts. We got about a minute left. What do you think about the movement in gold here over the last week or so?
Actually, there's some cycle lows right in this period. We're probably going to screw around until Thanksgiving, which is next Thursday, so a week from today. I'm thinking we're at a low in here. I got some up down. I thought about sending some charts over, but I have some up down volume and advanced client indicators that are actually hovering around zero. And if this was in a downtrend, normally they'd be down about minus 10, minus 20. And ironically, they're not. They're not in an uptrend yet, but they're not either. They're not in a position to show a lot of weakness in the market. So I thought that was interesting. So actually, I'm still long gold and gold stocks, and I still think we're going to go ahead higher here.
Good enough. We'll be back in a minute. We'll have chart 2 up. And we'll be back with Tim Ord of the ord-oracle.com.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back with Tim Ord, and we're looking at his second chart here, which is the NYA percentage of stocks above 150-day and moving average end of day.
Right. Okay. That if you look at the second window up from the bottom, that's that NYSE stocks above 150-day average. Want to point out here like I said, the market weakens before it makes a top, and that stocks above the 150-day average shows that weakness. And normally when it can't get above 70% is where the trouble comes. And if you look back in 2000, late 2007, 2008, I got some red vertical lines on that chart. And it's a little bit kind of hard to read probably, but the stocks above the 150-day average on that 2008 decline, starting in 2007, never got above 70%. So I just wanted to point that out. And also in 2015, stocks above the 150-day average never got above 70%. And again, back in 2018, the same thing happened. So I just, so major declines occur when there's not many stocks carrying the rally. And currently, stocks above the 150-day moving average, when I did this, I have 84.74. It's actually 84.04. I mean, 84% of stocks are now above the 150-day average. So the market's in basically a strong position here. That's why I want to point. It's another chart that looks at the longer-term view, and we're not bad. So we got seasonality, especially in December, showing some positive seasonality coming up, and there's another chart here too. If the second chart down from the top is the NYSE summation index, and normally when it gets below, I think it's 500, and then rallies to plus 1,000, it's usually initiation of an uptrend, and we had that coming off the March low. And we're still hanging around 500 right now, plus, summation index is plus 512, which is a good, a strong position. But normally if you can't get above 1,000 like it did back in 2015 there, and actually 2018, it failed to get above 1,000 off those lows. So that was another warning sign, kind of a different indicator saying the same thing. And if you look back in 2008, 2007 time frame, which is where those red vertical lines are, it barely got above zero, let alone plus 500. So it just shows weakness. And right now, we're most of the stocks are basically in an uptrend. So until the market, most stocks start weakening, the uptrend is probably going to continue for, I'm thinking months now. So it'll be interesting to see, but this intermediate term view, according to these charts I showed you, is we're basically in a fairly healthy position, even though there is a president change. The markets doesn't appear to be having any fear of possibly a Biden administration, according to this chart. So I thought there might be, because he's talking about raising taxes and on the corporations, and if you do that, they'll take a hit in earnings. But evidently the market's not afraid of it, so we'll have to wait and see.
Well, if you listen to the talking heads, they're saying the markets love gridlock and nothing's going to happen. So
that's right. It's you're right. It's because they don't. They got the House, and President Trump hasn't succeeded yet. We'll have to wait and see how that happens. And but just probably Biden will be president, according to stuff I'm reading. But the Senate's kind of for grabs. But if they get all three houses, or get all three, I don't know, not houses, but all three government positions, branches, and things could happen then. So evidently the market's thinking that the Senate's not going to go to the Democrats, is what this chart is saying. So
let's go to chart 3 here. We've got about 3.5 minutes left.
All right, chart 3. I think you wanted to see something on options, I guess.
We were talking about options, but also I was showing you, or sent you, the one where the just how low the options have been, but also even the out of the money puts and calls. No one's interested in buying them over the last few days. And that's generally when I get really worried, because there aren't a lot of shorts then if the market does turn down to be automatic buyers and slow the crawl down. Generally, you get a lot of hiccups to the downside when everybody stands back. So.
Oh, I mean, out of the okay. Well, this chart is actually the middle chart. There is the equity put call ratio readings with a 21-day average, and this chart goes back to 2003. And normally, when it gets around 0.5253, we're at the average right now is 0.50, and it's been there for the last good 6 months, and nothing's happened. I mean, in the previous times, you got declines, which is those blue vertical lines when it got below that. And here we've been below 0.53. You know, look, eyeballing here, it looks like since about June. And, you know, market, you know, setting at all-time highs here, close to it. And my point of showing this chart, even though sentiment is not ideal here, momentum rules everything. You know, if you got a momentum chart and a sentiment chart, you go with momentum. You know, if the momentum's up, you got to wait until it weakens, and so far it hasn't weakened yet. So, but yeah, the 21-day average of the put call ratio readings is not in a bullish position here, but so far it has not made a difference. Will it make a difference? Maybe, you know, maybe next year it will. I don't know, but. Or maybe this is leading 6 months. 6 months from now, it could have a big effect. I'm not sure, but it's not in a good position right now. And it hasn't been in a good position. So sentiment works, you know, a lot of times it's something to watch. But like I said on my market letter, you know, momentum rules everything. So if momentum's up, I don't care what anything says, momentum's up. So right now, so far, the minimum's up, even though sentiment is not ideal. So you have to, you know, bet between the two. You bet on momentum. So,
well,
but,
hopefully we just don't have to bet.
What's your put call ratio reading say?
Options all point way lower. So I wasn't really surprised when we had kind of a hiccup yesterday. But generally, you get one of those, you get two of them. So maybe tomorrow is another big options expiration day to the downside. But so far, volume fairly light as we push higher. But wouldn't be the first time that we get a nothing expiration day either. Thanks for calling in, Tim. We'll see you in a couple of weeks. Tim Ward of the ord-oracle.com. If you want to see those charts, just email me at path@tfnn.com. And we'll see you in 2 weeks, Tim.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get a competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
As you said earlier, somebody asking about, okay, got that. Okay, we'll get yours during the next break for Randy and Geraldo. So we got a market that's kind of creeping up slowly. Options are, we're up, 13 points. Volume has been poor most of the day, even down and up. But not a lot of movement other than that, so we'll keep an eye on it. What do we have here? Okay. Not much in the way going on here. Okay. Let's go through these charts already. Some of these are earnings. Some of these are just news. Baidu, another big gap lower. Volume not all that big. You're back to this gap up on the 4th of November with just under 5 million shares with 3.5 already. So see how that one comes in at the end of the day. BJ Wholesale Club opened much lower, kind of recovered here before the end of the day. Got some nice volume, kind of not understanding exactly why that sold off in the morning. Big candle out here today on Salesforce, but not a lot of volume. So this kind of looks like it could be an exhaustion move into Friday. CSIQ. Everybody been bugging me for the last, 6 weeks about solar panels and how solar was going to take over the world and everything else. And I still don't see it. The problem with solar is that you've got to have some way to store it. And on a small scale, there's no easy way to doing it. If you use a battery pack at your house to store solar power, you're basically going to be paying about 4 times the going rate, at least here in Florida, to buy and manage and repair the batteries over time. So not a really good economic solution for that. You had a nice gap down to 35.40, still a little lower than yesterday, but a little bit of a repair out here. Did fill the gap with that wick, but you had a lot of volume. I still don't suspect much is out there. Got a quick email here from somebody when I just said that. You got to know how electrical systems work, especially on the big scale. But generally you get a big, like these big guys that around here that have a power plant. They'll have power plants that mostly run on natural gas or coal or something like that. And they're running at 100% all the time, for the most part. Now, if you're in the mountains, you'll have a giant reservoir, and any additional power, you pump the water up to the top of the hill, And if you need everybody decides to turn their lights on at the same time, you use that water going through a turbine to make the extra power you need literally this second. And that's the way power supplies in the big city work. Not everybody can put a 20,000 gallon water tower in the back of their yard. Like I said, the batteries are far more expensive. So you're always, if everybody did it, you'd be able to bust the power supply from the city or town or the state or whatever you're looking. There's got to be a better way to scale that out, and it does not exist yet. And especially a lot of people all talking about battery-powered cars. You don't have the lithium available if everybody wanted to go to electric next year. I don't think you got the lithium available for batteries if you decided to do it in 10 years. So there's going to be something better. I think it is fuel cells. At least you can store it for a while. You could actually hook up fuel cell technology to your solar panels. But again, fairly expensive. You'll still be paying about 3 times the going rate here in Florida, maybe 3.5 times if you wanted to store it with fuel cells when you add the maintenance and everything else. And you still have to have that big power supply when the clouds come over or the wind stops or, it's midnight. There's not a good solution that doesn't mean you have to have literally redundancy 3 or 4 different times other than just having a big power station. So, maybe when they get that price down, maybe when they find a better way of storing electricity at your house, it could work. The problem would be that everybody does put solar panels out. And then imagine a cloud comes over something like, Tampa, and you get 200,000 people all wanting to run their air conditioners at one time. All you're going to do is melt down the power grid. So there's a lot more going into electric cars and everything else. And even some places that I thought was interesting this week, that it costs more in Australia now to own a Tesla than it does to own a gas car. And they've got huge taxes on gas down there. But Tesla's charging out the wazoo for their power stations. It's actually cheaper to buy a EV from Lexus. You only pay about 3/4 of that, but of what the Tesla recharger is, but it's still more expensive than actually driving around a gas car now. So it depends on where you are at in the world, but there's not a magic wand for all this stuff. And we really have yet to see a ton of these cars showing up in the junkyard needing $20,000 battery packs. So not saying it's a bad idea if you live in the right area, like in Arizona where that you're going to have 350 days of sunshine of a year, probably much better than Florida where we get maybe 270. But like I said, all you need is one big cloud, the wind to quit blowing if you've got windmills. And, if you're in West Texas, probably a pretty good idea. You live in Florida, maybe you get wind half the time. So you always have to be worried about that, hurricanes, other issues. There's no easy answer to replace electrical power stuff, but we shall see. And here in Florida, electricity is a little bit more expensive because they have to have diesel generators when everybody decides to flip their air conditioning on at one time. Kind of the same thing as the water company all having to make ready that there's enough water during the halftime at Super Bowl when everybody flushes their toilets at the same time. Yeah. Of course, everybody always wondered what would happen if all the Chinese jumped up and down at the same time on the opposite side of the earth. But we know nothing would happen. Give me a call, 877-927-6648. Still have plenty of time. We're up 13 points on the S&P cash, but volume's kind of light. Jack in the box, who my brother worked for. up a bit today, but the question is whether or not it's going to hold the previous high of 88 bucks. It's at 88.92 now. But it can pull back a little bit. Got enough volume. It just doesn't look like we're building inventory if it's not. And we'll be back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, Keysight Technologies earnings opened lower, is kind of back up to the highs. Not a lot of juice in this one, not a lot of sellout. The big winner of the day is L Brands. Again, I have no idea how this is going to come back with mall shopping at Lowe's, but what they didn't do is blow up and had a lot of short sellers in it. And if you don't look like you're going out of business and you got a monster amount of short positions, they can ring your bell fairly quickly. Up to $39.95 today, and looks like it's going to hold it fairly well going into the close. Macy's, kind of the same thing, opened a little lower, actually drove a little lower, and then kind of back up from fairly decent volume. I can't imagine Macy's or any of these other things that stores that demand or need big shopping malls to exist. Maybe they go online, but can't see them ever being what they were before. NetEase, a nice pop on this one on earnings. Volume's okay. Not much going on there. NVIDIA, like I said, just kind of going sideways out here, driving a lot of money in options, both puts and calls, to money heaven. And, of course, somebody is ringing the register today in the option market maker that had puts and calls spreads on it, won the lottery today, as all of them probably went to nothing. Okay. Roku, another big winner today. Certainly open, kind of flat, drove it. Again, lots of short sellers in a very few handful of stocks. But if they're big names, it's been pretty easy to drive people out of the short positions. Anyway, volume's okay. 16.5 million shares. Sell when you can, not when you have to. We shall see you tomorrow. Same bat channel, same bat time.